Hi, Angie. How are you?
There we go.
Hi, Angie.
Hey, Victor and John, can you guys scoot about 6 inches closer together? That would be amazing. Thanks so
Thank
much
you.
for joining. So for everyone who is with us, we have quite a crowd today. Thanks so much for joining. I'm Angie Rupert, founder of Rupert Law Group. We handle exclusively E1 and E2 visas. So whatever treaty country you're from or where you want to be, we can help. And today we are joined by Victor Maldonado and John Drage. Drage? Yes?
Right.
Fabulous. And we are going to talk a little bit about taxes, which is everyone's favorite subject. I know that. And Victor is located in Mexico City. John is located in Miami. However, they're both in Mexico City today. So we're going to talk about the E1, E2 for people, specifically Mexicans who want to start potentially business dealings in the United States, but maybe hang on to their business dealings in Mexico, maybe not. However, for those of you joining from countries other than Mexico, a lot of great information here, immigration and tax information as well. So with that, Victor, tell me a little bit about your background and kind of some different things that you see for people who come to you who maybe are thinking about moving to the United States or have already moved to the United States from Mexico.
That's right. Thank you, Angie. Yes. Well, I've been working for 18 years, focused on ultra high net worth individuals who actually, as you already said, they move to the U.S. or maybe they have one step in the U.S. and another one foot in the U.S. and one foot in Mexico. So we have all type of cases, but yes, many of them are currently thinking about moving. So I think this live is going to be like very useful for many of our clients, and also we're specialized at M&A. So it's an interesting combination between business that they could have in Mexico because they create fortune here, and wealth that is located in the U.S., for example, or any other country because. In the past, for example, Switzerland was so famous for that. So I think it's important to watch this event because you can have a good idea about what is important to consider when you're moving to the U.S. or when you're applying for an E1 or E2 visa, because many people think that it's like a blessing, like becoming American, but not for tax purposes or not necessarily for tax purposes, unless you made a good planning before that. So that's why John is here. John is my partner in Miami, and he's gonna be very useful as well because here he knows why. I only know that it could be a problem if you don't plan, but John knows why. So why don't you talk about your experience, John?
Thank you, Victor, for your kind words, and thank you, Angie, for having us on today.
Yeah.
We have a boutique international tax firm in Miami, and we focus solely on both inbound and outbound U.S. investors. So a major part of our practice is investors that come in here to the U.S. from Mexico, and they want to invest in some type of vehicle, or they want to move and bring their family over here. So something that we do is help with the planning aspect and help make sure that the clients are kept compliant with the IRS, meaning that they're filing their annual tax forms and they're kept up to date with all the tax matters, and make sure that if they do want to come into the U.S., that the planning is done so that there's no adverse tax consequences.
Yeah, so I mean, I think you guys touched on something that's really important. I get this question a lot for people wanting to come over on E1s or E2s. Oh, what do I need to do for taxes? When am I a tax resident? So it's very important to note that an immigration resident is not a tax resident and vice versa. Could you talk a little bit about that? What makes someone a U.S. tax resident?
Absolutely. So essentially when somebody comes into the U.S., let's say they were to enter in as of today, right? There's still, there's over 183 days left in the year. There's around over 200 days. So if they were to enter as of today and they were to stay for the remainder of the year, they could potentially be considered a tax resident. How the IRS tests this is essentially they look at a couple of tests. So one is they look at whether you spend over 183 days over a 3-year period, and it's a formula that takes 1/6 of the days from the last 2 years, 1/3 of the days from the prior year, the current number of days in the year. So we essentially have to look at the number of days, and typically we tell the client, try to stay under 120 days before you become a tax resident. Let's start getting the planning process in place. If you spend more than 183 days, there's still some things that we can do depending on whether you're treated as a tax resident of Mexico or the country. The first thing we want to look at is whether you're a resident of a treaty country. So let's say you're a resident of Mexico and you pass this 183 days, we could potentially do what's called a treaty tiebreaker, where essentially if somebody spends over 182 days and they're treated as a resident of Mexico, depending on where their home, their family, their furniture, automobiles, clothing, jewelry is located, we could essentially treat them as resident of Mexico and non-resident for U.S. purposes.
Interesting.
So it's a bit tricky.
Yeah. So that's interesting. But, and I think that nothing, I mean, you guys deal with this kind of stuff, as do I, which is every single case is a little bit different. So super important to talk kind of before, not only for immigration, but for taxes, right? Rather than, oh, hey, I moved here 6 months ago. Now what do I do? You know, it'll all work out in the end, but it may save you a lot of money and a lot of time to kind of pre-plan. Now, Victor, what about for someone, for like, let's just talk about the E1 visa for a moment, right? Which is about people who trade a lot with the United States. Maybe they have an established business in Mexico. They have a lot of U.S. clients, or they buy, import or export from the United States, that kind of thing. Don't really plan on starting a business in the U.S., but need to be here a lot. And maybe they might meet that resident requirement just because they're here for maybe every other month. They're here buying stuff, that type of thing. What does that really mean for Mexican taxes? Does that mean anything?
Well, there is one important thing that I should say for Mexican purposes. That the definition of tax residency is different from the U.S. So from U.S. purposes, it could be as simple as I am a U.S. citizen, so that's why I'm a tax resident for U.S. purpose. You can correct me if I'm wrong in something, but or for example, the days formula that I think Albert Einstein will understand it very well, because I don't. 133 days every 6 months multiplied by 25, whatever. So Mexico follows the OECD rule, which most of the countries in the world follow. And actually, the Mexican U.S. tax treaty also follows that type of rules, which is where you have your abode, where you have your house, your permanent, or it is a house that has to be at your disposal, like every time of the year. So that's the first rule. So you can have a lot of business in the U.S., but if your abode is in Mexico, you're a tax resident in Mexico. And if you live, of course, in Mexico. If you have an abode in both countries, then you have a problem, because we could say that under tax treaty, you have a house in Mexico, a house in the U.S. So you come to what John referred about. Where is your personal relations? Where are your political relations? Your economic relations? Where's your central vital of interest? That's the important word. But if you can't decide, because it's so like even, then you have to be. Then the treaty says, where are you a national? And if you're a national in both countries, which could also happen, then the tax administrations have to do a process called an MAP, which is a mutual agreement procedure, and then they decide where are you resident. But I think that those are cases, there are very complex cases that are not common.
Right.
But for Mexico, if you have a lot of transactions in the U.S., you better have an LLC or a corporation, because then you could have a permanent establishment in the U.S., and that's not good. So the answer is nothing happens if you keep being a resident in Mexico. But depending on the type of LLC of company that you have, you should consider tax consequences in Mexico or not, depending on the type of company.
Right. So in the case of like an E2, and John, maybe this is a question for you, but in the case of an E2, where someone from Mexico, any country really, but from Mexico for these purposes, says, hey, I'm going to start or buy this business in the United States. My plan is to move there. I'm going to be running the business and that type of thing. All of my Mexican stuff, house, business, what have you, I'm going to liquidate. I'm going to be done with that. I'm kind of moving to the U.S.
Mm-hmm.
What does that mean? Or maybe Victor, actually, this is maybe a better question for you. So you're not kind of doing the back and forth thing. Not to say you could never go to Mexico, but maybe mostly just to visit family, vacations, that kind of thing. You're really residing in the US. Does that kind of get you off the hook for some of the stuff in Mexico?
Yeah, I'm gonna give an answer first, and then I'm gonna let John tell what happens in the US when you already migrate. Okay, so Mexico, this is gonna be a bit funny for many people, but not for Mexicans. Mexico has become it's true. Mexico has become a tax hell. Maybe you're aware about that, the word tax heaven, which means a place where it's very easy to comply with taxation, or where you can find a 0% tax rate for activities that are not carried out in the country. But Mexico's all the country is a tax hell. Why? And what does this mean? This means that to make for example, a request before the tax authorities, it's something that it's nearly impossible in many cases. So you can't comply with the minimum requirements that there are asked, for example, to get out of Mexico. Let me explain. In Mexico, you should notify the tax authorities 15 days before becoming an American U.S. Tax resident, for example, that you are an American tax resident. But in order to do so, you need to comply with two requirements that are maybe impossible to comply. I think in the U.S. it is possible, but for example, in order to do that that notice, you need to have your tax ID for U.S. tax purposes, but you have to have it 15 days before going to the U.S. So you can do that, because there are many assumptions where you can become a tax resident in the U.S. before living in the U.S.
Right.
But in many countries it's not like that. So in this case, let us say that I can comply with the first requirement, to have my tax ID before going to the US. Okay, so we comply with that. Now let's talk about the second one. I need to find a guy that is willing to be liable with me in case I fail to pay a tax in Mexico. And for the next 5 years, the Mexican IRS, or SAT, as we know it, can go with this guy and charge everything that they find out about me and that I didn't tell. For example, an account at Switzerland. If today a family has an account in Switzerland, every year on December, Mexican government will know about this because of the CRS agreement, which is automatic exchange of information. So maybe I went to the US, I live in the US, I'm a US tax payer, but Mexico finds out in the year 4 that I leave this account in Switzerland without reporting. So in that case, they can go with this person that I name as a legal representative, and they can charge him. So who is going to be willing to do so? This is a 2022 tax reform, and I think it's impossible that someone will say, oh, yes, I will respond for John. Well, for John is a bad example. I respond for Victor, and no matter what happens, I'm gonna, because that person has to demonstrate that it has the assets to pay the tax So how do I calculate that? What if this person moves to another country? So it's like impossible, and that's why our Attorney General for Taxpayers Defense, which in Mexico we know as PRODECON, it's an independent organization that defends taxpayers. So it has a criteria which says, okay, if you don't comply both, don't worry. In the substance, you're a U.S. taxpayers, so don't worry. But Mexico could say no, because you didn't comply both. You're still a tax resident in Mexico. So that's why I say it's a tax hell, because Mexico could say, I don't care if you lived for 10 years in the U.S., you're still Mexican because you didn't name a legal representative here that's going to respond for you. So that's the thing, it's very hard.
Interesting. But okay, so let's say we want to have all of the good news too, right? So there's a lot of bad news when it comes to taxes. I mean, that's just the way of the world, right? For all countries, it's all usually bad news. But there are still tons of people who want to move to the U.S. Obviously, there are some amazing benefits there just for your business, especially if you're an entrepreneur, right? We're the largest kind of entrepreneurial capital society in the world. And for people who really want to do business, it's still the best place in the world to be For sure. So let's talk about maybe, John, too, in the U.S.
Yeah.
Maybe some interesting, let me back up for 1 second. I think it's pretty clear between the three of us that you need professionals on your side if you're thinking about moving to another country, the U.S. or anywhere, right? For example, however, there are going to be some interesting, probably tax benefits, or maybe a couple of like fun surprises in the world of taxes. John, please tell me I'm right. There might be one or two small.
Yeah. I think one, and Victor, thank you for mentioning it. Before Mexicans become U.S. Tax resident here in the United States, with the planning that we do, depending on what type of company they have, it is possible that we can do what's called step up the basis in their assets. Mm-hmm. So let's say I start a company in Mexico, and I started this company with really $0. Just it's kind of the know-how and the knowledge, and now this company is worth $10 million. Without the proper planning, if somebody becomes a U.S. tax resident, U.S. residents are taxed on their worldwide income. So if I were to sell this company for $10 million, essentially I would have to pay both Mexico and U.S. taxes if this is a Mexican company.
Yeah.
So something that the U.S. allows with proper tax planning is what's called step up in tax basis. So we can essentially, before they come, get a valuation on this company and step up the basis in their assets. So if this company is worth $10 million, their tax basis is now $10 million when they go to sell the company. So essentially, that's a way to minimize taxes if somebody's planning on selling their company in the nearby future.
So let me see if I understood well. If you're a Mexican that became an American and you have a zero tax basis cost company, and someone is willing to buy your company, then just for the fact that you moved to the U.S. and got your tax ID and whatever, you became an American taxpayer.
Tax resident, yeah.
Tax resident, yeah. You can have a step-up basis, and let's imagine that step-up basis is about 10 million as well. So they buy the company for 11 million. You're gonna only pay taxes on 1 million.
Correct, if the proper planning is done.
Wow.
That could be a big benefit, right? And so I don't want anyone to be scared away from doing what they're going to do. I think just be scared into hiring the right people that know what they're doing, so you could potentially save a lot of money in the long run and in the short term, honestly. I mean, this is something else just to kind of be aware of, right? For people maybe that aren't planning on living in the U.S. but being here. I mean, honestly, just on a B1, B2 visa with like a border crossing card or something that most Mexicans have, you know, a lot of people, for example, own a house maybe in the Woodlands, Houston area, you know, other areas of Texas is a very popular place for Mexicans, some Arizona, some California, some Florida, that type of thing. And of course, yeah, anywhere, Vermont, Hawaii, wherever you're at. But those are kind of the hotbeds for a lot of those coming over from Mexico. But you don't have to have what they call, you know, a resident visa, even a temporary resident visa to become a tax resident, right? You could come over on a border crossing card, be here 6 months every year, which is very doable from an immigration perspective, totally doable. That also may subject you to tax residency, right, John?
Correct, Angie. And something as well that you mentioned that's important. A lot of people will come here and they decide, they start working with a realtor and they want to buy a house, and they end up owning it in their individual name. That can cause adverse tax consequences. So something, if you are planning to purchase any property, make any type of investments, anything immigration related, it's always important to consult with advisors like us, CPAs, attorneys, and make sure from a Mexico and U.S. perspective that everything is clear on.
Yeah, and there's something I want to add to what John is saying. I think it's important that people know that, and I'm just talking, he's the one correcting it. Anything is wrong because I'm a Mexican attorney, but not a U.S. attorney. I think that there are two types of taxes in the U.S. that we should be aware of. The first one, as we already talked about, is the income tax, the federal income tax or local income tax, whatever. Mm-hmm. But the second one is the estate tax, which when you are Mexican and you're investing already in the U.S., for example, let's talk about a condo or a company or a bank account, maybe. If the amount of the value of that investment exceeds $60,000, you're gonna be subject to a 40% estate tax rate in case you die.
Correct.
In case you pass away. So, well, the estate is going to be subject to taxation. You're going to be dead. But the thing is, when you become an American tax resident, it doesn't mean that you become an American tax resident for estate tax purposes. That's my point. So you could be like an American tax resident, a Mexican tax resident. You could be complying in both countries, as many people do, but you could believe in your head that you're protected against that tax. I believe, John, that in order to be considered as a resident for estate tax purposes, you should be living in the U.S. and planning to live in the U.S. to stay living in the U.S. because then your exemption will come to $11 million instead of $60,000. So I don't know if that was right or wrong, but that's something additional that you should consider when you become.
So that would be a plus for staying more time in the U.S. then. That would be something at least to consider for Mexican estate tax purposes. So yeah, and just to kind of touch on the immigration stuff for just a little bit, I think both of you have actually mentioned, personal taxation versus corporate taxation, of course, for an E2 visa or an E1 visa. For an E1 visa, let's just get that out of the way. You don't necessarily need any company located in the United States. You could just still be running your Mexican company, but have more freedom to cross without the hassles and have the flexibility to be working here. That's always a gray area question. And honestly, for attorneys too, what is considered work? On the E1, that's totally fine. On the B1, B2, or a boarding crossing card, you cannot work, but you can be here for business related purposes. That's kind of a fine line, right? But the E1 would eliminate any issues there. In addition, it will eliminate issues of, oh my gosh, like there's a really big deal going through and I really don't want to come across and back and cross. I need to stay here for a few months to really get this done. On the E1, that's going to be possible. So that's a benefit from the immigration perspective. For the E2, of course, that would be kind of, you don't have to give up your Mexican business. Many people do. Many people don't have a Mexican business. You don't necessarily need one for an E2, but that's really kind of moving your family over here. The E1 is flexible to say, yes, you can move here with your family if you wish, but you don't have to. So if you're kind of on the fence there, they're a little bit different, but if you're on the fence there, maybe talking to John and or Victor would be helpful just to get some information about, for tax purposes, what may work better in your case. Right, guys?
Correct. It's really important that when somebody is planning to move here, comes to us and decides what type of entity they would like to have, whether it's an LLC, corporation, and kind of planning for the future, what the revenues will look like, what they're planning on doing. There's certain incentives for export activity. So it's really important that we analyze the business model, project out the financials, and determine, if the client wants a structure that's maybe more flexible because they plan on living in Mexico and not immigrating to the U.S., right, or if they plan on living in the U.S., what type of structure we can set up for them, and considering their worldwide assets. I think that's really important.
Or what if the structure is already set? For example, many Mexicans, they decide to incorporate the classical LLC, which is transferred for tax purposes, and they pay taxes in Mexico. But for example, if the business is going to be happening in the U.S., it could be very expensive for the Mexican tax resident. So in that case, I personally tell my clients to incorporate a corporation, or a new.
Which is for example, separate entity, right? It's not even you anymore. Now it's its own thing, its own entity in the United States.
But for example, for Mexican purposes, it's I call it a tax suicide.
Victor,
to have a
corporation.
No, but look at this. If I'm a Mexican individual that has a U.S. corporation and I'm a taxpayer here, if I distribute a dividend, for example, the final tax rate is more than 60% for me, because I pay in the U.S., I pay in Mexico, and I pay here for the dividend. But for example, if I have a company through a Mexican company, like a U.S. company through a Mexican company as a holding, then my tax rate is 30%. So it's half. So those are the details that you should consider when being Mexican. But it's not the same if I become a U.S., because when I migrate, I'll be an American. I'll be a U.S. taxpayer with a Mexican company and an American corporation. So that will be like, I don't know if that's the best tax decision, because Mexican rate is higher than the US at the corporate level. So that is where the game starts.
And Victor, something else to add, and what I've heard is that depending on the state and where you incorporate the corporation, could depend on what your taxes you pay in Mexico. Because, for example, Texas doesn't have a state income tax, but Florida does have a state income tax. Can you elaborate on that a little?
Yeah, that will be that is something that I don't mention much in conferences because it's like I don't know, it's complicated. But even Mexico, for example, if someone is very technical, could say that there are some states in the U.S. where there is no local income tax, or where the local income tax is not considered, for example, income tax for Mexican purposes. So we're talking about a tax heaven for Mexican purposes. Even if that sounds amazing, the U.S. could be a tax heaven. So it will be like a very complex situation there.
Yes.
But as I said, that the game starts there. So I just like to add that the most common structure for Mexicans are for wealth purposes. Could be maybe an account through a trust or through something that is not subject to the U.S. estate tax, like a Canadian LP or a trust, or and for example, for operating purposes, we Mexicans love the U.S. LLC or a corporation.
Yeah.
So yeah, I think we need like a one-day live just to try to get like the cases, but I offer to anyone that is looking at us, they can ask, and we won't charge.
Yes.
We can just try to solve any question that they have.
And I think that's really important for the E1 and E2, right? There's a lot of different options, a lot of different things and considerations. The important thing when you're talking about international tax or about immigration to the United States is this: you hire someone that has the knowledge about what their specialty, but also has the relationships with others who can kind of walk you through. Because as you can see here, the Mexican tax goals, the United States tax goals, and the United States immigration goals are three separate things. Don't let it be overwhelming. Let John and Victor and I be overwhelmed. We'll help you. But the important thing is to know your goals and hire someone or a team of someone like Victor, John, and I who can kind of work together to best fit your goals. I think that's the important thing. Thank you guys so much. I hope we can do this again soon. And next time we're going to pick like a little small kind of mini topic that we can really dive down into and dig in and answer a lot of different questions. But thank you both so much. We're going to include contact info later when we're able to add that in the notes. But for now, for Victor and for John and for me, Angie Rupert at Rupert Law Group, thanks so much, guys. Have a wonderful afternoon. Thank you.
Thank you.
Thank you.
Thanks, guys.
Have a wonderful afternoon.